This date reveals the 1.2% burn date for Turner Classic. Why the morning of September 12 at around 9 a.m.? UTC is such a major deal will be discussed. When and how will Binance's burn be implemented by these other large exchanges? And how will this affect the availability and pricing of Turner Classic IT? As a result, let's get right down to business and publish this tweet. Plus, they're fantastic. The paper dissects the blockchain's new code. Specifically, this is an update on the 1.2% burn that was included in version 22. There has been much conjecture about the precise date, but we finally have some information. This means that the tax will begin collecting at roughly 9 a.m. UTC on September 12th, when the block height of 9,346,889 is processed. You can see that a proposal for a parameter modification is required for any blocks that are higher than 9.3 million on September 12th, which is the height at which the tax power upgrade becomes a tax. My best guess is that the burn will go live on-chain on September 12th. In any case, following that we shall have a suggestion to alter the burn's parameters so that we may determine their values arbitrarily. Consequently, the blockchain's burn or burn rate will be quite low on September 12th. From what I can tell, the burn rate will be set to 0% on that day. However, on or around September 12th, we will be voting on a parameter modification proposal to decide whether or not to increase the burn rate to 1.2%. Because obviously the fire isn't a constant state, right? Depending on market conditions, supply quantities, and volume, it is subject to change. We may increase it or decrease it in the future. At the moment, however, this is the most important date to remember. What kind of effect will this have on major markets like Binance? According to available information, Binance is behind the 1.2% burn. They've made it clear in this very section that they approve of ideas 356.849.5 and will even help spread the code for them. The tax cut and burn proposed at 1.2% on all transactions is 3.56.68. Additionally, KuCoin, a cryptocurrency exchange owned by Crypto.com, has publicly addressed the issue. It is common knowledge that besides Mandela exchanges, several other major exchanges are also on board with this prohibition. As for the main exchanges, we have them all covered. We know Binance is processing it, and we know KuCoin is as well. It is plain to observe that the majority of daily Turner Classic transactions occur on this exchange, and I have no doubt that the prohibition will be enforced across all marketplaces. Therefore, the centralized exchanges will either automatically or manually enforce this ban. Centralized exchanges, I believe, will simply impose a 1.2% charge on all trades made through their platform. All of this will be sent to a burn wallet, from which it will be distributed hourly, daily, weekly, and monthly to the official Terra and the original banned wallets, as soon as a buy or sell transaction is completed. However, the amount to be burned will be instantly deducted from the banned wallet, regardless of the timeline they've set. And if really Classic has been making higher lows and higher highs over the previous couple of days, what can we expect to see in terms of a burn? 1.2% for match that Tony Classic is gonna go right to the bone wallet, and that Trillion Classic will be burned. Alright, the volume could use a boost right now. After the fear of missing out, FOMO on September 12th comes in. I'm surprised it's this low, but at the current rate of consumption, annual consumption might reach $5. 7 trillion if current trends continue. Monthly consumption could reach $500. 700 billion. However, we have witnessed quantities considerably larger than in fact. Volumes got above the 400+ million barrier, and we nearly saw it on a 24-hour timescale. Not here on CoinMarketCap at over $1 billion. Therefore, if we were to burn through $1.8 trillion in the first 30 days, we would need to reach the 500 million milestone. Then we'd be talking about a 3.6 trillion when we hit the billion threshold. However, it's important to keep in mind that volume changes might potentially cause these estimates to be off by a significant margin. There's a chance it won't remain at a billion. More expensive Classic territory means fewer tokens can be repurchased and burned in exchange for the same amount. However, I believe that removing 1 trillion tokens from circulation is very much on the table within the first 1-2 weeks if everything goes according to plan. Now, in regards to the immediate effect on the price on that September 12th day, or a couple of weeks after at the end of September, when we get the burns, and everything is going through as it might take a few days. Like I said, I get to that parameter change past and then for the exchanges to manually implement the burn as well. But I think we might have a strong FOMO phase when the price goes up 50% or more. Just like we saw earlier with this massive pump, which is important to keep in mind when thinking about price objectives. All of this is just conjecture, and I don't want to raise anyone's hopes too high. The ceiling is potentially very high. To be practical, though, I'll say that I expect a couple trillion tokens to be burned, thanks to FOMO and hype, in the first few months. This is where the long-term benefit truly comes into play. However, we'll need stakes to revitalize the Turner Classic Movies network and achieve a sustainable long-term burn. Now, realistically, I don't think the volume will remain at or over a billion for too long. My guess is the number is far over a billion, which is FOMO volume, but if we can keep daily transaction volume at or above $50 million per year, that's what you'll see. That's a lot of zeros over $2 and $2.5 trillion. If we had $100 million, we'd be roasting more than half of the turkey. Over the course of a year, we go through more than 5 million classic coins, which is more than half of the total supply. And we then pile it up to over 1 billion. In the next year, we might have depleted the circulating supply by $4 trillion and beyond if we can merely maintain a daily transaction volume of above $100 million. But this is highly conditional, as it depends on things like how long the firmware period is and how much progress is made in cryptography. As I've already mentioned, if the crypto market doesn't completely collapse, and if on-chain activity and volume improve, and if the old blockchain begins to offer real value and has real projects built on it, then we have a chance. Earning a couple trillion in the first few years is not out of the question. The 1.2% restriction will also apply to Terra class at USD. So we know that the size of the problem there is the resulting burn debt. Since one of the primary functions of the Lunar Classic blockchain was to serve as an algorithmic stablecoin, this aids in our ability to repay, eventually reach a dollar amount, and possibly even pay back in Classic. However, I wanted to inform you on the situation and give you the correct date. The height of the blocks under consideration is as shown here. However, a parameter adjustment is still required before the burn can be turned off, as can be seen in the code. After then, the fire effect can be considered formally added to the program. Its value will very certainly be 0. The burn rate can then be adjusted using a parameter. A burn rate of 1.2% indicates that combustion has begun. As we've already mentioned, the major exchanges will execute it manually, and only then will we see the supply gradually decrease. In just a few days, we have staked to